Hey there, and welcome to the show. I am your host, Michael Blank. Today, we're interviewing Tim Bratz, who, interestingly enough, when he was 23 years old, bought his first property, a duplex, on a credit card. Yeah, so gets this. He calls up the credit card company, has a $3,000 line of credit, and he says, "Hey, I'm Tim. I don't have any credit, but I want a $100,000 credit line." And it went from there. So fascinating story. Today he's at 1,500 units. He's only 33 years old, controls $90 million of assets. And just a fascinating journey on the one hand. We talk a little bit about raising money because the environment of raising money is very unique right now. There's a lot of uncertainty in the stock market. And how do we capitalize that as money raisers? How do we capitalize on that to help raise money for our deals? And when I say capitalize, I mean how do we educate people to pull their money, to have the courage to pull at least some of their money out of the stock market and investing it with multifamily. So we talk a lot about that, and I really think it's going to be helpful as you go out raising money as well. So let's get right in the show with Tim. Here we go. Tim, welcome to the show today.
Michael, appreciate you having me here, bud. Really appreciate all the value you bring, and I'm excited to be here.
That's awesome. You have a great story because you started buying off your first property off a credit card, and you achieved somewhere like 1,400 units by the time you were 33. So I just can't wait to get into your story. It's pretty awesome. Let's rewind the clock a little bit back to a younger self and this first deal. I think the duplex that you bought. First of all, before you get into the mechanics of that, why in the world did you start investing in real estate? What was going on in your life, in your young life?
Yeah, so as you mentioned, I'm 33 now, and when I was going through college, 03 to 07, market was going gangbusters. Everybody's making money in real estate, and I remember hearing a story about like one of these big home builders, a friend of mine was interning for them and said, hey, they went into a meeting once and the VP just walked in with $100 bills and said, hey, somebody give me a good idea. Even dumb ideas were getting $100 bills, and they were throwing around stupid amounts of money. And so I was like, I want to be in real estate. And so that's what motivated a 20-year-old kid. I moved out to New York City. My brother, I'm from Cleveland, Ohio originally. That's where I live now. My brother was living in New York City as he's a federal agent. And I got a job out there as a commercial real estate agent. So I did leasing of retail spaces. And the first lease that I ever brokered was $10,000 a month, the 4% annual escalation with a 12-year term. Oh. And I made, I ran the numbers on it, and I was like, this landlord is making almost $2 million off of 400 square feet for something he did one time. He's getting paid on it for the next 12 years. Not to mention the other 7 retail spaces and 15 stories of apartments above it. I was like, I'm on the wrong side of the coin. I need to be owning real estate instead of brokering real estate. And it motivated me to move down to Charleston, South Carolina. And that's when I bought that first house, that duplex, on my credit card.
Tell us about that a little bit, because even the duplex is arguably like the first multifamily. It's not technically multifamily, but it's more than one, right? So why?
It's multiple, I guess so. Yeah.
How in the world did you ever get around to buying a duplex on a credit card? That's crazy.
So, was 23 years old at the time, and I don't have any money. Nobody's going to lend some punk 23-year-old kid who's never bought a house before a bunch of private money to go buy properties. So you got to start asking yourself better questions. And when a lot of people would say, hey, I don't have access to capital. I don't have access to resources. I remember seeing a Tony Robbins talk once, and he's like, resourcefulness is the ultimate resource. So regardless of not having time, not having money, not having knowledge, if you're resourceful, you can figure out any of that stuff. And I think that's probably a trait that I've been able to, I never let like the negative talk shut me down. I always started asking myself questions, which I think gave me answers. It got my thoughts, the juices flowing, the creative juices in my mind. And so, what I ended up doing was, hey, how can I get access to money? And by asking myself that question, I thought, I had a credit card. It had $3,000 limit on it. And so I called my credit card company. I was like, hey, I'm about to make a big purchase. I need you guys to increase my limit like right now. And they said, how much? I said, I need $100,000. They're like, man, this card's been open for 15 months. Like, you don't have any credit? Like, I said, it's better than no or bad credit, right? Like I'm trustworthy. Like, dude, you don't have a mortgage. You don't have a car payment. You don't have anything. We can't give you $100,000, but we'll give you 15. So they give me 1.5. And this is in 09 now. The market just tanked. And all of a sudden, like, there's this flood of properties on the market for pretty inexpensive, but still the cheapest house on the entire MLS was $25,000. I went in with an offer at 12, went back and forth, got it for $14,000 and bought it essentially with the balance transfer check for my credit card.
You just paid cash for the thing, cash through your credit card.
Yeah, yeah. So it was $200 for 0% APR for 6 months, and so I paid $200 for the money, and then I had a couple $1,000 saved, like $8,000 saved up, and I put about 4 or 5 into the building, and I had to live off of the rest. And then I didn't know how to sell, so I just I printed out a whole bunch of flyers, and I made some bandit signs, and I posted them around town, knocked on doors, held an open house, and a neighbor came in and bought it for $33,000. So after closing costs, I made like $13,000 in 75 days in the worst real estate economy in 80 years. And as a 23-year-old kid who's doing his first deal. So it kind of got me hooked. I did a little bit more, kept on doing it, got into wholesaling, familiar with that whole process.
Sure.
And then I ended up meeting
wholesalers. I used to get a lot of my houses from wholesalers. Yeah.
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 So one of the ways that I get apartment deals is from my residential wholesalers. I realize that they don't know how to underwrite a commercial deal, so they usually just discard those leads. And now, so I let them know I'm buying, and now they send me their deals. I just bought a deal. I'm all into it for $1.9 million. It's just appraised at $3.5 million. So cool. It's amazing. Like if you just use the same strategies that I use in the residential realm to find deals, I do the same thing in the commercial realm. So anyways,
what I love with that, but because you're glossing over some of the things, but see, you're not saying I can't do this. You're asking the question, how can I do this? And it's a totally different mindset. Mm-hmm. When you start asking questions around that, things start presenting themselves. But if you say I can't do this, there's no possibility, right?
Right.
I don't say where there's a will, there's a way. When there's no will, there's no way.
If you say I can't, it just shuts down your mind.
It shuts down your mind.
Thinking. And goes to another thought.
I never would have thought of the idea, I'm going to call my credit card company, increase a $3,000 credit limit to $100,000. Like that's an insane question or thing to do. But clearly, when you ask that question, it must have popped out of the ether somewhere. Like, oh, that's a good idea. Let me call up my credit card company.
If you don't ask, you never know.
That's right. That's right.
Yeah.
That's awesome. So you started, you flipped the house. You said, this is pretty cool. And then you did more of it. You got some wholesaling. At one point, did you start getting in? Because this was all flipping stuff, really.
Yeah.
So
eventually what happened was
buy and hold stuff.
Yeah, eventually what happened was you start meeting people who are active, or they see what you're doing. They realize that you know what a good deal is. They see your work ethic, and they might have access to money, but maybe not the bandwidth to take on any more projects. And so that's what happened with me is I met some people who said, hey, I got the money, but I don't have maybe the knowledge or the experience or the bandwidth to take on any more projects, or I haven't gotten involved in real estate, but you obviously know what you're doing. How about I put up the money, you do the work, and we'll figure out some sort of equity split. And so I did that, and I had a bunch of small investors, and then eventually had a couple of brothers with another big business. They put almost $1 million with me in a span of a couple of years, and I turned it into and we did everything. We flipped houses, high-end flips, low-end flips, single-family rentals, duplexes, triplexes. And then I bought my first 8-unit building 6 years ago this month. And so I buy that. I fix it all up. It was stupid cheap in a C-class area of town, and I couldn't lose on it. I'm buying an 8-unit building for $30,000. And then I put another 50 into it, rented it all out. My cap rate on it was like 33% or something insane. So like you do that, and then all of a sudden I reflected back on my business after that first year of doing work with these guys, after we flipped houses and did low-end rentals, single-family rentals, apartment buildings. And I looked at where are we making the most money? And this is really important. I think this is one of the biggest, has really helped me navigate and shortcut versus just not reflecting. I take the entire week between Christmas and New Year's off, and I just goal set, and I take minimum 1 day a quarter off. I unplug everything, and I just work on goals and make sure, and I ask myself questions like, and what am I doing? Is it the highest and best use of my time? Is it the highest best use of my team's time? Is the highest return on our time, highest return on our investment? Where are the most headaches coming from in my business? Where are the least amount of headaches? Where's the most money coming from? Where's the least amount of money? And I just refine every 30 days. And if you keep on refining and cutting out the fat and just focusing on those, the higher revenue generating activities and the higher revenue generating assets, then eventually this stuff compounds pretty significantly. So that's what I ended up doing. And I realized apartments just met my long-term vision better, and it was more scalable. the financing was easier, and all those kinds of things. So we doubled down on apartments, built up a portfolio of a little over 100, 150 units, something like that. And then that partnership actually went south. We ended up going separate ways. There was a kind of a bad breakup, and we're friends now. But this is one of those, typical partnerships. I usually advise people against getting in a partnership because there's always that balance of who's doing the work, who's bringing what value. Life happens. People have kids. People get married. People, move, and there's too many variables that can shift. And everything sounds good on the onset, on the front end, but things just shift. People change, or situations and circumstances change. So that ended up, we had to liquidate everything. That happened about 3 years ago, and I've been doing my own thing for the past about 3.5 years. So building up my portfolio, I'm at I'm at about 1,500 units right now. I have a 35 unit closing on Thursday, and I have a 407 unit closing next Friday. So I'll be at right around 2,000 units in 42 months. And it's amazing how at first you crawl, and then you walk, and then you run, and the way that this thing can compound if you just keep on doing the activities in a consistent manner and a consistent basis of finding deals and finding money, and how this can generate. I think being in the early part of the year right now, a lot of people are goal setting and have some big ambitions. For me, what I've realized is I always overestimate what I can accomplish in a year, but I grossly underestimate what I can accomplish in 36 months or 48 months, or, and I think that's something for people to be aware of, that when you go to the gym, you don't see results in 30 days or 60 days or 90 days. You see them 120, 180 days down the road, and people are like, "Oh, you look good, Michael. You've been working out. Yeah, you look a little more trim, a little bit more buff. Hey, awesome." And you're like, "Dude, I've been working out every day, an hour and a half a day, 6 days a week for the past 6 months, sweating, bleeding, crying, achy muscles, icing them, and you're just now seeing results." And I think that's very analogous to what happens in business too, right?
Yeah. You're talking about the various uses of your time, and what do you think right now is the best use of your time? Some activities versus others.
Raising money, 100%. I think if you control the money, you control the deal, and I think finance is the industry that commands all other industries. So if you focus, I'm to a place where I have a chief operating officer, I have a chief legal officer, I have an acquisitions team, I have a project management team, and a kind of like an asset management team, and oversees the property managers. And so I've been able to, and that didn't all happen. Initially I hired an assistant, and then that assistant turned into, my asset manager. And then all of a sudden I hired another buddy who ended up being my project manager and just overseeing the contractors. Then I hired another buddy who ended up being my acquisitions guy. And then I made him my COO. And then I hired an intern who turned into my acquisitions. So it's like, it was very step by step. I didn't just like come into this big organization. And I found that my time is best spent raising money. One is again, finance is the industry that commands all other industries. I love real estate, but if I control money, I can also invest in other projects or other assets or other businesses as well. If you control the money, you can control your entire organization too. You control the deal. He who has the money makes the rules, right? That kind of a thing. And so I'm a big believer in raising capital, and that should be the last thing that you let go of as you're automating your business and building your business. And it's also the most important, because you want to that relationship and make sure your investors are being taken care of, because you miss an investor payment, or somebody doesn't get paid back the way that they're supposed to, or poor expectations are set, and that can really sour your reputation in this industry.
You talked about hiring contractors early on, and I went through the same thing. You hire some assistant, and this grows into that. And every time you hire someone, you hem and haw over it, because at the time when you're hiring that person, it actually costs a lot of money to bring that person on.
Yeah.
Talk a little bit more about the consideration going in. So even a beginner syndicator should probably think about bringing someone on. And if so, what kind of help should one think of bringing on, and why is that a good idea?
It's a really good question. So I run some masterminds, and I plug into a lot of masterminds, and I see, early entrepreneurs like like the hardest growth for me, this took me like 2 years to end up like understanding. I couldn't figure out how people built big businesses. Like I'm a solopreneur. I'm doing all the work myself. I'm doing accounting. I'm doing marketing. I'm doing project management. I'm doing asset management. I'm doing acquisitions. I'm trying to raise the money. I'm trying to structure the deal. I'm signing on loans. You know, I'm going to the bank. I couldn't figure out like how the hell does somebody go out and build a big business? Like how do they build this big team? And it starts with one, and it starts with one hire. I remember going to my first mastermind. It was about almost 4 years ago. And I showed up, and I asked that question. And the guy in the room, he goes, you just need to hire an assistant. Get the low-level stuff off your plate. Not that it's low level. It's just not the highest and best use of your time. And have somebody else handle those tasks for $10, $12, $15 an hour.
What are some of those tasks, Tim? Go to describe, because I think some people might be confused about what they could potentially outsource.
Yeah, it's so let's go into that in a second. Let me talk about mindset shift first. So the year before, I had made a little over $100,000 wholesaling deals and all that kind of stuff. So when I sat in this mastermind in February of 2015, and the guy tells me, go spend $35,000 on an assistant.
That's a lot.
I'm like, dude, I don't think you realize that's like 30% of my income, you know? And he goes, you can't look at it that way. He said, look at it as $2,500 to $3,000 a month. Hire somebody, try it out for 30 days, 60 days. Worst case scenario, it doesn't work out. You spend $5 or $6 grand and you part ways. He goes, I'm telling you, you're going to see such a better return on your time that you're going to want to hire everybody. And so that's what I ended up doing. So I came back from that mastermind in February of 2015. I hired an assistant March of 2015. And I had made like $120,000, $130,000 a year before. I made 400 grand the next 10 months because I had somebody else handling the activities that were not the highest and best use of my time. Highest and best use of my time were the things that are close to the revenue line. So imagine there's a revenue line. It's the actual things. And you can boil down in any business. It's usually, 3 to 5 things that are the highest return. It's usually finding money, finding deals, and actually like cashing checks or something, So for me, I hung on to those kinds of things and I staffed out everything else, like literally my laundry or my dry cleaning and like that kind of stuff I staffed out. I staffed out getting my car washed. I staffed out, all the marketing type stuff that is important, but somebody like you can automate a lot of that stuff with if you have an assistant. Going to the bank and cashing checks, going to the post office and delivering mail and checking the PO box, like all that kind of stuff was the first kind of things. And then I ended up outsourcing inspections, and that saved a ton of time. This is when I was in the single family realm, and that's transitioned over to multifamily too. But I put together like this 3-page condition report, and I had my assistant go out to properties, walk a property, and take 100 photos of it, the inside, the outside. And on this condition report, it literally mentioned everything. So it would talk about, hey, what does the driveway look like? What does the sidewalk look like? What does the walkway up to the house look like? What's a porch foundation look like? And that's all the concrete stuff. How's the landscaping? Are there any trees? And so it made it stupid simple that anybody could read this sheet, make notes on it, and then take 100 pictures. So when they came back to me, they could upload it, and I could look at the condition report, look at the pictures, and be able to make a decision on that house and how much work it needs just based on those 2 things. But think about how much time that saved. 30 minutes from driving to the property, 30 minutes from driving back, an hour spent at the property, putting all the information together is another probably hour. So it saved me 3-4 hours of time to outsource that and it cost me what, $15, $12 an hour, $15 an hour. And so I was able to pay $45 essentially for somebody else to go out and do that. And then how many phone calls can you bang out to other motivated sellers or private lenders and investors in that regard? So that was a big deal for me.
Yeah, that's awesome. And I think we can all figure out what we can delegate at any level, whether you're just starting out or even in your case, if you get a little bigger, hemming and hawing over a COO. Oh my gosh, it's a first 6-figure hire possibly. That's really scary place to be. It's the same thing, but different, like a different level. So
let's go back to that real quick. So I have a COO and a CLO, Chief Legal Officer, that handles all my syndication documents, securities docs, all that stuff. And now I'm handing off the private money lending so I can just go out and do marketing. And so these 2 guys are really like the engines that run my business now, and I'm the fuel for the engine, you know, in the marketing piece. I'm out there meeting with people, building relationships. And then as far as the work goes of, you know, the logistics of collecting the money from the investor and having them sign all the paperwork, that goes to my CLO. For any deal flow and anything like that goes to my COO. So how do you bring on somebody of that caliber, a six-figure, maybe even a multiple six-figure? I asked myself that question, and it led me down this, well, I could pay them $100,000 to $200,000 a year. That's a big nut to cover, you know, especially when you're growing your business and getting. And so I thought, how can I attract, I started asking myself a better question, and you lead to better answers. How can I attract a highly qualified person without having to take on a ton of overhead? And what I just kind of figured out is I pay them a salary. Everybody in my company makes $50,000, $48,000 a year, including myself. And then I do profit share on how well the company does across the whole thing. And so based on what the role is or the position, they get a certain amount of profit share based on how well the company does. So if we make, for easy numbers, $1 million net profit, and my COO has 15% profit share, he gets a bonus of $150,000. Yeah. So now I can afford a $200,000 employee, and he's motivated also to the point where he wants the company to be profitable. And by doing that, it takes a lot of things off my plate, and visions are aligned. We're in the boat rowing in the same direction, kind of a thing.
Yeah, I like that a lot, and it kind of limits your the overhead. We're combining that with equity as well, so we have bonus per annum, but it's invested equity over time.
So I do a profit share, so it's not equity, and then eventually what I'll end up doing is bringing them on as an equity partner, invested in, as long as they're with me for 10 years, 15 years, something like that. But right now, it's just based on cash flow profit share.
That's great. You talked about your best use of your time is money raising. How has the money raising environment or strategy shifted for you over the last few months?
Yeah, it is. it is very, very. It gets easier and easier to raise capital. One, because the market's good. The economy's been good. People are making money. Their stocks are going up, and so they want to go and invest in other things. And so so it's been pretty good for the past couple of years. Really the past couple months, now that the market is not going up and people are thinking we're at the top and people are afraid of what's going on, and you see the volatility that's in the stock market, there's a lot of people who want to get their money out of the stock market and into hard assets. And that's a huge opportunity that we have as active real estate operators and syndicators, is to help people pull their money out of the marketplace, put it into something that's backed by real estate that has cash flow in place that will appreciate over time, and be able to ride out that storm of that economic uncertainty and political uncertainty and everything that else is coming down the pipeline right now. And so, I just ask everybody one question: how's the market treating you? And then you wait for an avalanche of complaints about it going up and down. And, it's easy to have a conversation about that because, we have control over our assets, over real estate. We don't have control over the stock market. You can't control if, Volkswagen is cheating emissions tests, or if, Elon Musk smokes a joint on live television and the stock drops by 15%. You can't control any of that stuff. You can't control trade talks with China and how that's going to affect certain industries. That's all out of our control, which means the stock market's out of our control. If you got a lot of time and you got stupid money and you don't want to think about it, then go invest in mutual funds or something. But to me, you're not taking responsibility over your money if you do that. I think by connecting with guys like us, who are experts and ninjas in our field, who know multifamily better than anybody else in the country, it's one of those things where their money's way safer with us being able to direct it and make sure it's backed by a hard asset that has cash flow coming in. And the reality is, multifamily real estate is, in my opinion, hands down, I don't think there's anything else that is as insulated as multifamily, like B-class, C+, B-class real estate. When the economy's good, everybody can afford B-class apartment buildings. When the economy's bad, all those A-class renters move into B-class areas, and we're very, very insulated. The financing's in place. It's non-recourse. There's so many things that limit the risk for us.
We have a really exciting message, and I share the enthusiasm you have, because I know there is no better investment than multifamily syndications. above average returns, incredible tax advantages, amazing. And then look how it performed in the Great Recession. It's hysterical. We have a 545 unit in contract in El Paso right now, and we got the privilege of hanging out with one of the two partners. He's like 80 years old. His hands shaking a little bit, and he's just talking about his life. Like, he survived the savings and loans crisis, the recession. Wow. He's got 10,000 units, and he's got gazillionaire. It reminds me of Warren Buffett a little bit, dresses like he's poor. Yeah. And I said, name is Bill. I said, Bill, how did you survive the last recession? And he also likes trading stocks, which is funny. So he goes about describing how he put in cash stops, and he was in cash for a while. Then he started selling put options. And it was fascinating. After 10 minutes, I said, Bill, fascinating, but how did your real estate fare? He goes, I don't remember. It was a non-event.
Wow.
I'm like, are you kidding me right now? I was like, this message needs to get out, right? So this guy has thousands of units, and he doesn't remember what happened because nothing happened. So
yeah, that's powerful stuff. If you're investing for cash flow, it's way safer than investing for speculation. If you're buying and developing to resell and hoping that the values maintain in 18 or 24 months when you're going to resell townhouses or condos or something, you're going to get punched in the gut pretty hard because you can't. That's all speculation based. And the guys who lost all their money and all their net worth, which was all on paper, fugazi, fairy tale dust, back in 2008, 2009, were all speculative investors. And the people that I've learned and I met and I knew that were able to ride out that storm were the people who bought for cash flow, and they had tenants paying their rent every single month that covered all their operating expenses, that covered all their debt service, and put cash in their pocket at the end of the day. And they were able to ride out any storm. And when the market came back with a vengeance over the past couple of years, they could either refinance, they could sell, they could do whatever they wanted to do, and their net worth, exponentially grew.
Yeah, it is actually pretty cool. So let's talk about some of the passive investment stuff, because it is really exciting, and I kind of share your excitement about it. So as a passive investor, what they should be thinking, they're obviously concerned about the prospect of the stock market. What is your advice to a passive investor who's trying to figure out what to do with their hard-earned money?
Obviously there's people with money in the stock market, and it's more of an education. It's not really trying to sell somebody. It's just educating them that there's better options out there. A lot of people just don't realize that there's other options. They don't know that you can take your 401k or an IRA and roll it into a self-directed retirement vehicle and invest it into real estate. They don't know that that's even out there. So it's more of an education piece and walking somebody through that whole thing. And I think one of the big things with raising private money that people don't realize is a lot of people go and try to raise money when they need money, and they get kind of desperate. There's a desperation that comes off with it. So you think about when you're hunting versus fishing. When you hunt, what happens to the prey? Runs away, right? Versus when you fish, you're putting a lure in the water, and the fish come to you. And so I think raising private money is more of a fishing strategy of just putting lures in the water and letting people know what you do, how you do it, and even when you don't need any money, so that way when the time comes that you do need money, you can pick up the phone, make that phone call. They're already educated. There's no learning curve. The relationship's already built, and it's now it's just numbers. What are the economics of it? And so, I tell people, investors look for three things. One is collateral, like what's the asset that we're investing in? Real estate, B-class apartment buildings, at least for me, is what I invest in. It's the most insulated asset. It's easy to educate them. It's really probably the least of my investors' concerns. Number two is the return on investment. Is the reward worth the risk? The perceived risk of the deal. And so you got to make sure that you're paying them something that's better than the marketplace, better than what they can get elsewhere, and perceive the risk as low and the return as better than what they can get somewhere else. And three, which is the most important one, is the credibility and the fortitude of the borrower, meaning you and me and any other syndicator who's raising capital. You have to realize, like, these private lenders are asking themselves, the main question is, does this person, meaning you as the syndicator, have the fortitude to repay me my money? Do I think this person can deal with a storm of crap that comes through economically, politically, market shifts, whatever, like operationally? Do I think that they're going to be able to get through all that stuff and repay me my money and do what they say that they're going to do? And if so, I found that that is the most important thing. Are you a good steward of capital? And by demonstrating that and educating people, it demonstrates the credibility that you have in the marketplace of being able to navigate any sort of adversities that might come across your plate. So for me, it's just educating people and letting them know what I'm doing and educating them. And eventually they bite. They bite the lure and they come in. I was just on another podcast, a good buddy. Everybody knows him in real estate. He's a big name. And I've known him for 10 years. I bought his course 10 years ago, and he was on. I was on a podcast of his, and he's like, "Hey man, I see what you're doing, man. I got a few $100,000 a month coming in, like just excess cash flow. Like we got to talk. I need to put it somewhere, and I like what you're doing." So it's just it's just one of those things where I've never pursued him. I've never asked him for any money, but I make sure he knows what I'm doing, and I make sure he knows like how I do it, what I do it, why I do it, and they'll come to the conclusion on their own that it's the right thing to do for them and for their capital and for their legacy wealth that they want to pass down to their kids. That it's the right thing to do to invest with you or in your project or whatever that looks like. So I'm very intentional about having conversations with everybody I talk to about money, how the market's treating them, what kind of returns they're getting right now. And from a genuine standpoint of let me help you with your wealth and your personal finances. And because I believe that much in my product also in what we do. And, and there's obviously self-interest in it, which there is in everything pretty much that everybody does, is it helps me build my business and employ other people and contribute to society and clean up neighborhoods and, all those kinds of things. So it's a win-win for everybody, but I'm such a big believer in it. I'm very intentional about having those conversations. I'm not bashful at all about talking in dollars and decimals to people.
Yeah, I love the hunting versus fishing analogy. It's quite a bit different, right? Because a lot of people raise money when they have to, and it doesn't work. It just doesn't work. Versus, how can I provide value to other people? In this case, the guy's freaking out a little bit about the stock market. Well, how can I educate them about alternate investments? And you do that over time, and then at one point you actually get a deal, and you do make that phone call. They're like, man, Tim has been so great. He's really been helping me a lot. I'm going to give him a shot. Right.
Yep.
And it takes a lot more time, and it appears less effective. And this is why you got to start doing it now and not waiting until you actually have a deal under contract, which is fabulous. So, hey, Tim, how can people connect with you?
Yeah, I'm pretty active on social media. I'm on Facebook. I'm always trying to give out free content and free education. I walk through a lot of my deals and how I structure them and give out pointers on how to raise money, how to find off-market deals, and all that kind of stuff. So connect with me on Facebook. Hit me up on there. My website's CLEturnkey.com/blog. Like, there's a lot of stuff, a lot of blog stuff and posts that I write on there and videos that I do on there too. And that's probably the best two ways, but I appreciate it, man. Thank you for having me.
Well, first of all, thanks for coming on for the show, and thank you for all the content you're putting out and sharing kind of your success and experience. So definitely check out Tim's website. And so thank you so much for coming on.
Thank you, brother. I appreciate all the value you're giving and making a big difference. So keep doing what you're doing, man. Thank you.
Oh, man, so good. So I love the hunting versus fishing analogy, and you're constantly trying to provide value for your investors. And I love the question, hey, how's the stock market treating you? And let it kind of rip. We have a very unique time in the market where it's actually been pretty good. People have made money, but there's a lot of uncertainty and fear out there. And we have a great product, guys. Multifamily is just so good for a passive investor. Above average returns. He's got cash flow built into the investment. That's outrageous. It's got an incredible tax incentives. I mean, ask your CPA about accelerated depreciation, cost segregation. Like, you probably won't even pay any taxes on the income you make, which is just crazy. And then the risk profile of how multifamily performs in a recession is just it's just unbelievable. There's nothing like it out there in the world. You have great tax incentives with oil, for example, and that's fantastic, but there's no cash flow and it's highly speculative. If they don't actually hit oil, you can lose the entire investment. That just doesn't happen in multifamily. And I just really love that. So if you're a passive investor out there and you're listening to this and you're looking for an alternative to the stock market, there actually is one. There's a variety of alternatives, but multifamily syndications are just so good. You can't beat them. If you want to find out more about what we're doing, go to the michaelblanc.com/invest and sign up for Investor Portal. And you're going to get a whole new set of content that everybody else does not see, just really educating you about the different kind of opportunities, multifamily, but there's others. There's self-storage and there's mobile home parks. Alternatives to the stock market is really what it is. Man, you just don't control the stock market. But I can tell you from experience, pulling your money out from the stock market is like, I mean, a nail biter. Like, just getting over that hump is amazing. I'm not even saying you should pull out all your money out of the stock market, but some of it. So just educate yourself, find out more. It's just a really cool thing to do. And we have a lot of great deal flow. And there's a lot of great deals out there. They're hard to find, but the good operators, and we're one of them, have the ability to find really good deals. So just take a look at it, michaelblanc.com/invest, and see how you can get involved. And if you are if you want to raise money, if you want to be a money raiser, you want to syndicate money, take a look at some of our programs. We have the Ultimate Guide to buying apartment buildings with private money. And that comes with a live event as well, and we have some mentoring programs as well. That's at the michaelblanc.com/coaching. Check that out if you think that will help you. So really appreciate this. Really appreciate you guys taking the time to listen to this. I will catch you on the next episode. All right, I hope you enjoyed that. Now, as the next step, download this ebook right here. Okay, when you've downloaded that, make sure you also subscribe to my YouTube channel, because then you can get all of the videos that I release as soon as I release. So make sure you subscribe to the YouTube channel right now. Click on that right now. And then also make sure that this is the next best video to watch is this one right here. So hope you enjoyed that. I'll catch you next time.